The following tax deductions are no longer available for you now that the big, beautiful bill has passed. My name is Paul Vázquez with Tax Lab, and you need to become an ethical millionaire. Now, maybe these deductions don't apply to you, so I'll try to knock you out the box so you can go on your merry way if these deductions don't apply to you. Let me show you where I'm finding these in case you think I'm just making this up. So I have downloaded the bill. You can go to congress.gov to get a copy for yourself. But I've downloaded it here. You've got this HR1. You've got United 119th Congress of the United States Act. Here it is. And we are specifically going to be looking at right here up at the top, 70110. All right, so right here, termination of miscellaneous itemized deductions other than educator expenses. So for most of you, everything's going to be gone except for if you're in education, but not everything. So I know I'm still leaving you on a bit of a cliffhanger here, but if you're an educator, maybe you stop listening to this right now because you're still good if you're an educator. Remember, this miscellaneous itemized deduction comes into play if you have more itemized deductions in value than your standard deduction, right? So your options first is standard deduction. And if you've got more possible itemized expenses than what the standard deduction value is, then you might want to go itemized. So even if you're not a teacher, and you take the standard deduction, then you don't have to worry about this. You're taking the standard deduction. So if you have nothing else going on in your life, just straight W-2, nothing else going on in your life, this may not affect you anyways because you've got no itemized deductions to worry about. No real estate, no personal property taxes. You don't have to worry about any of this because you're going to take the standard deduction. So if that's who you are, you're done listening. This doesn't affect you whatsoever. Maybe it will in the future once you have something more than just a W-2 job and you have maybe a car and a house. But if that's not you, go ahead, just scroll away. You're done. You're done with me for today. Okay, so if you're still listening, if you're still curious as to what changes they've made, I've highlighted here, it's the 70,110. And so I put it up there in a little search bar, and there's two of them. So this is the title where they're just giving you like a main overview of what this part talks about. And I'm going to hit the little down button, and bada bing, bada boom, we're here. So this is the section here, and I'd blow it up even more, but then it wouldn't even fit on the screen. So it's here. It's a lot of jargon. You're welcome to go through it, but I'll try to give you kind of my understanding of what it's saying. So back with the Tax Cut and Jobs Act, they took away a lot of these itemized deductions. These miscellaneous deductions can only reduce your income for 2%, right? So these miscellaneous itemized deductions could only reduce your income for up to 2%. So what are you really fighting for? 2% of your income. Now, depending on your income, that could be high. But there's also like limitations within these limitations. So this rule, what it does is it says they will make permanent the loss of all these other possible itemized deductions that taxpayers had prior to the Tax Cut and Jobs Act, but they're leaving open and continuing on for the teachers. So, the teachers are going to still get that deduction for their expenses. And what that is if a teacher is paying out of pocket for school supplies and materials that they use in school, they can get they can put that on their itemized deductions. So they've probably got other things going on besides that teacher expense, but that's the teacher stuff. The things that remain gone and are going to stay gone, you can find on the IRS website. So here we are, publication 529, right here. And this talks about these miscellaneous deductions, and you can go there for yourself. I'll try to knock out a few highlights on this. Main content, right? You can no longer claim any miscellaneous itemized deductions that are subject to the 2% of AGI limitation, including unreimbursed employee expenses. So this is the one I think most people get stuck on. Like I'll have people come into the office and they'll say, hey, I bought the steel toe boots, or I bought this thing for work, my W-2 job, and I can't write it off. Or I'm trying to write it off on a Schedule A. I want to take these as a tax deduction. At one time, back in the past, you might have been able to do that. Now, you can't unless they have a few exceptions. So maybe you fall into the exceptions. See, this is why I just can't automatically tell everybody this is not for you, and it only applies to certain people, because we have exceptions to the exceptions to the exceptions. So right down here comes those who will still most likely be able to take these expenses: armed forces reservists, qualified performing artists, fee-based state and local government officials, employees with impairment-related work expenses. Now, just because it says that doesn't mean that you qualify just because you can see yourself fitting into those categories and you believe your expenses fit into that. You have to kind of dig deep into these rules to say, okay, they're saying this, but what does that really mean? For example, if you look at the qualified performing artist, so you're fighting for 2% of your adjusted gross income to be reduced on an itemized deduction. For the qualified performing artist, this mythical performing artist, the expenses has to be related to income they got as a W-2 employee from 2 different employers. So they have to have at least 2 W-2s from 2 different employers for which these expenses apply. Could they have more W-2s within the year for multiple employers? Yes. But if you're a performing artist on TikTok or wherever else, and you're not getting a W-2 from multiple people, then this isn't going to apply to you to be able to write off additional expenses. Once again, this does not mean as a performer you can't have your own business and be writing off those expenses as a business owner. So if you get a chance, I know we're running out of time, if you get a chance to go through these to see what is still available and what's not, this isn't the final list. Like, I'm just going back. This update, this form on the IRS website of where they give you us a summary was made back in 2020. So that's after the Tax Cut and Jobs Act stuff, but before this new bill. So I believe it's going to keep these cut out. There are some that are still available, like the lottery, the gambling losses. If you have winnings, you can write off your gambling winnings up to the losses. But once again, this is up to 2% of AGI on an itemized deduction schedule, not the standard deduction. For most of these expenses, the best way to get write-offs for them is to have your own business and to have a lot of these listed as business expenses when they qualify. Go to lab.tax.